Europe responded calmly to Standard & Poor's decision to cut the credit ratings of a number of Euro countries, the most notable being France. By early afternoon, the major markets, including Frankfurt, were relatively flat. The downgrades, which were based on concerns over Europe's ability to handle its two-year debt crisis and the lack of economic growth, had been anticipated for weeks, so the initial impact on stocks was muted. In Paris, Budget Minister Valérie Pécresse told Europe One Radio France will press ahead with its policy course.
L'enseignement que je retiens de cette...
The lesson learned from the loss of our AAA is that we must persevere in the reforms and certainly not slow them down.
Europe will likely remain the focus of attention as a number of countries hold bond auctions. French success with selling short-term debt and a drop in the yield on its 10-year bonds boosted shares in late trading, but worries remained over Greece, which needs to clinch a deal with its private creditors to ensure its next bailout payment, after talks on the private sector involvement, or PSI, were suspended Friday. Negotiations are expected to resume this week, but they'll likely be tough, and analyst Vangelis Agapitos blames pessimism over the outcome for the Athens exchange, spending much of Monday in negative territory.
I would not necessarily tie this to France's downgrade. I would relate that performance to the difficulties that the PSI negotiations are facing.
The euro itself was relatively steady after falling to a 17-month low Friday. Karen Sloan, The Associated Press.